Good morning, everyone. Today is Sunday. Sunday, what date? Sunday, I forget the day already. 27, 28, 29. My computer is block my day to read.
That sounds... No worries. Could you tell me a bit more about the issue? Is it a software problem or something with your computer's performance?
Don't worry about it. It's minor problem. I can deal with this. But today, I just want to starting up the day with testing the recording sound system. Where do I gonna begin? Yesterday, Bitcoin was dropping, catastrophe, wipe out most of 98% of my balance. That's catastrophe. So I have to build up again from 40 euro that I left on my account, which is I have to try different strategy now, and the strategy will be hedging strategy, which is I come in to match up the final problem when I eat up all the good green profit, and then I left the bad one running, and that bad one I expect it to run back to where I was cutting the loss or make a small profit. But my greedy said, oh, I wait until it's complete, eat up a whole profit, both up and down. This is wrong. The one that left minus gained speed on Bitcoin yesterday and dropped down, and I thought they're gonna stop somewhere and I can gain my position back, and my account is landing roll and margin call, and the bank is not allowed to access the money to stop the margin call. So I let the things run, and Bitcoin wiped out almost of my entire account, which is the game. I start to do this 3 times now. I gain like 10,000 euro in one start, which is start from 100 euro capital, and then after that I keep the thing run, didn't take my profit, and then it wipe out my account. This is not first time, and this is second time, third time. No, this is about the third time that happened, which is I have to find a new strategy about hedging to get rid of that negative profit when I close the positive profit and calculate. And I don't know how to do this right. Maybe I have to just open a few positions. One is make like 50% benefit, cut all the loss and start again, and I will control max 4 or max 5 position running, both in and both benefit and negative, or both upside or downside, to calculate the premium that I get, the small amount of profit. That's my problem today. Any suggestions about hedging technique?
I'm really sorry to hear about your experience. Hedging can be a useful strategy to manage risk, but it requires careful planning. Here are some suggestions. 1. Set clear stop losses. Even when hedging, it's crucial to set stop loss levels to limit potential losses. 2. Diversify positions. Instead of having multiple positions in the same direction, consider diversifying with positions that can offset each other. Monitor closely. Keep a close watch on all open positions and be prepared to adjust your strategy as market conditions change. 4. Risk management. Always ensure that the amount you're risking is within your comfort zone and that you have a solid risk management plan in place. Educate yourself. Consider taking some time to study more about hedging strategies and how they can be applied effectively in your trading. I hope this helps you find a more stable approach. Let me know if you need any more assistance.
Yeah, but the first thing I like to try is to do my plan strategy, just one direction. If I buy, I want to go buy, and to do that buy, I have to wait, be patient to wait for the price pull back to some certain level, like 50%. At the best is more than 60%. If it's 32%, it depends on how the price accelerate or how strong the momentum. But anyway, I need to waiting for the price to pull back. That's my problem. I don't wait, and I see I just attack. I'm so aggressive to attack earlier without looking for the momentum and the pullback, where the key issue of the level when the price pull back, that it will bounce and give me some income from that calculating. And when I see the price strong in either side, I just jump in. That's my problem. And I think, okay, I will take another hedge when it's something went wrong. But today, first I have to try my strategy. If it's work, then if it's not work, then plan B is hedging. Today, Bitcoin is, after dropping for quite a deep pullback. I say pullback because the higher time frame, weekly, monthly, is green. They are the one who propelling the market, and their intention is to go up north. And just now they go up north, so high up in the sky, high as the known price is, like very high, as I say, it's very high. They need to pull back. That when they pull back, they probably have to pull back deeper, because the price they are now maybe not satisfied for them to take another searching ups to the north. They want the discount price. But my problem is the pullback thing is very slow and taking a lot of patience. I said to myself, if I have no patience, I should forget about trading. And now my new problem is to overwin my aggressive, my too quick not to wait. And today Bitcoin is, I'm planning to buy. What do you think about my buying? Because yesterday it's dropped quite deep already, but they respect the level of the buyer. They're not pulling back so deep. Let's say look at the weekly. At first the weekly pull back, and I can see that my dynamic key level is not being challenged. They just touch the top side of the range where they use the support turn to be resistant now for them, for the buyer. They pull back, that means the higher time frame taking a break. Okay, and this is what I need to wait for, to markets to searching up. But that's today I have to do something to not to get in early. Do you have any suggestions for waiting to see where is the key level and what kind of momentum that I need to see, rejection, weak or whatever, to see that they are going up now? Right now it's stable on the sideways on the weekly chart. So on the daily, you see more. They pull back first, create the range up above this pullback level now, and they break out from that up above range and step on the SLR, the key issue, the price level of the government candle, the green, the buyer or the guy who's starting this uptrend, who responsible for it, is still intact, not yet even breach, just slightly touch, but they respect the buyer are still up. They just pull back, and the pull back just a little bit poking out from this level and pull right back in. And now they're fighting on this level where I said I'm gonna have a patience for, to see if they can breach above, to get higher high and higher low. Put set in higher low, then they go. I have to stop and thinking about to buy again. Any suggestion from me from that, please? Let's try again. This time I set up one account at 3 screen. We're testing on the Bitcoin. Today is Sunday. The strategy is using demo account and trying to do hedging technique both side. Doesn't matter what direction it going to, but first we have to try to get this to get the plan strategy, normal strategy run, like set 1, set 2. Are you there? I'm looking for an assistant. Please come in, help me out this. Are you there? We are at the key level 83,287. The price now is moving up. At the location money spot, and the money spot need to go either up or down. The MA running down from yesterday, market dropped from here and make it to here. Not quite a big, but big enough to wipe out my account. Not account, yeah, it is 98% wipe out. 40 euro left on the account. Anyway, I said it before, it's just something to need to be polished about the strategy. So I don't know if he's here. Doesn't say anything. Can you help me on some question? Is this level are good to go down because it's yesterday is dropping to make my account blow out, and today come back to reach, trying to challenge this guy who's starting it, and he's almost there. Are you there? Hi there. You have an issue or what happened to you? Communication microphone, high definition audio device. Maybe I have to go check. Okay. Turn on microphone. Are you there? No hearing. Sound issue. I don't like issue. We'll see, we can fix this once and for all. Once and for all. Why? Hello there? Talk to me. Why is it so difficult to set you up? Hello? You speak to me before, now you don't speak at all. What did I do wrong? This is boring. No hearing. Something wrong. Even if using this, yeah, you using the microphone, but I don't hear you.
Ah, I see what you're saying now. If you're not hearing anything, it could be due to a setting issue on your end, or perhaps a technical glitch.
Okay.
I don't have sound capabilities, so I can't produce audio myself. If you're using a microphone, it might be interfering with the connection in some way. Maybe try refreshing or adjusting your microphone settings in case it's picking up something unintentionally.
Alright, I got
Let me
you
know
now.
if that helps.
I got you now. I got you on now. But the thing is, it's just a technical term, which is I have to.
It sounds like you're figuring things out. What's on your mind? What's the thing you wanted to mention?
First, I have to delete the record I just did for microphone problem, and then I'll come back to you. Okay.
Got it. Take your time to delete the recording, and I'll be here when you're ready to continue.
Anyway, I continue anyway. I delete when the editing video come, cut it away, things I don't want. Okay, now I have set up 3 different display on my screen. One demo account, the capital is 7,000 euro to start with, to test experimenting with this hedging, both direction, doesn't matter either way. And we would use the technique of what is coming, which is I don't know yet, with stop loss, take profit in every position for hedging, and that way I can learn a little bit more before I jump right into my live account when Monday the bank will allow me to deposit to my live account. But today, Sunday, demo testing the strategy with this. I curious on this technique of hedging, which is always both parties want something, and if we go channeling or targeting, highly concentrating on either side, and either side must make somewhat profit, and to set up stop loss and take profit and so on. Okay.
It sounds like you've set up a good testing environment for this strategy. Using a demo account to experiment with hedging while focusing on both directions is smart, especially with a new technique. By balancing the positions, you can assess which side plays out more favorably and how the market moves when you're targeting specific channels or levels. The idea behind hedging, taking both long and short positions, can help manage risk, but it requires good timing and discipline. Setting stop loss and take profit levels for each side helps contain the potential loss if one of the trades doesn't go your way. Since you're testing and learning before applying it to your live account, you can refine this strategy in a controlled environment. How are you planning to adjust your stop loss and take profit levels? Are you focusing on certain levels or indicators to help guide those decisions?
I don't know yet. That we're gonna find out. You will help me on. Okay, we will follow up on this key level now. The price, the moment price now. Which one that should I start first? Because the thing is, yesterday the price dropped to the low. They're moving up from the Asian market open around that, and Rich challenging the guy who started the move, the seller who moved the price down. He challenged this guy but not able to
Got
push it.
Since the price dropped to a recent low and is now moving up, it's important to watch for signs of whether the sellers who initiated the move are still in control or if the buyers are starting to take charge. This will give us a clearer picture of which direction to enter first. If the price is still near that key level and is testing resistance, we can start by selling.
Okay.
If the sellers are still in control, it's more likely that price will struggle to push higher and could retrace back down. On the other hand, if you see the price pushing through resistance or showing signs of a breakout, buying might be the better option, especially if it's breaking above that level and confirming the strength of the move.
For me,
I'd suggest entering with a small lot size on either side first. Since you're looking for small profits and quick exits, a quick scalp in either direction would be the plan. You can monitor the first few movements to gauge if the buyers or sellers are more dominant. If the market starts moving in your favor, you can tighten your stop loss to lock in the small profit, and if it starts turning against you, just exit quickly. How does that sound for getting started? Would you prefer to go with the sell position first, considering it's challenging the seller who started the move?
now it is, if you say V formation is the direction that challenges the other party to change the direction. Now the first V form up, even is struggle to coming up to challenge the first guy who started, but he still touch it and say, now I'm moving down to collect my strength by pulling back a little bit to his own, the guy who started, of the buyer who responsible for the last move that come up to this challenging this guy, and this guy still hold his ground. Before he pull back, if he pull back further himself, he's dead, but he's not yet die. He just pulled back to where he was, like 100% pulled back, and then start to grinding up, but he's not yet to make any higher high. All he can do is like almost reaching back to his record, and just about barely to reach to second time of his record. It's called a double top for me, in a sub minor in this guy who started for the seller to being challenging. So this is about crucial time they are fighting on the sideways market underneath the guy who started, the seller. They challenge each other now. The buyer who just approaching now is my hope that they will go gain the direction to go back to where they was before, and then partly bridge over and make another set of fighting to gain distance further up to beat the record of over all-time high again. So this is like the fighting now at this key level, and all I see is green.
It sounds like you're describing a classic market scenario where there's a battle between buyers and sellers, and both are testing each other's strength. Here's a summary of what you're seeing and how you might approach it. Sellers. The initial sellers pushed price down to a key level, but now they're holding the ground. There's some indecision. The price pulled back to test their position, but it hasn't yet made a higher high. Buyers. The buyers are now challenging the sellers, and they're testing the strength of the sell side by pushing up. However, they haven't managed to break through the key level or set a new high yet. It sounds like this is a critical point where both sides are in a tug of war. If the buyers can push through and break that double top resistance, there's a good chance they'll gain control and push price further up. But if the sellers manage to hold firm, we could see another pullback. At this stage, it's crucial to watch for confirmation. If the buyers start making higher highs and breaking above resistance, double top, that's your cue to go long, buy. If the price fails to break higher and starts rolling back down or showing weakness, the sellers could regain control and you might want to sell. Since you're scalping and looking for quick wins, I'd recommend placing tight stop losses to protect against a sudden reversal and quick profit targets on either side. You're looking for small moves, so be ready to act fast as soon as the price moves in your favor. What do you think about waiting for the next small push that confirms one side's strength? Do you feel like there's enough momentum to take a quick position now, or are you waiting for more signs to show?
I'm on 5 minutes charge right now. In this 5 minute charge, I have no patience now. I go to 1 minute direct to the candle by candle. All I see is the buyer has pulled back. The buyer pulled back the first time with many struggle of the seller trying to push it down. At the same time, this pullback get to stop at some level at my I don't want to say the number, it's take too long to read number, but anyway, this got another V formation underneath this key level, and they're about to breach it. This the first V formation have a pullback for the first group of the test, and just about to get above the guy who started, or the V formation or the key level, at they are almost there now at this one, and they're just about to breach.
It sounds like you're seeing a key W formation forming on the 1 minute chart, which can often signal a potential reversal or continuation if it's confirmed. Here's how I see it. Buyers pulling back. After a strong move up, the buyers are testing the sellers, pushing price back to a certain level, but the sellers haven't been able to take control completely. W formation. The key point here is the second leg of the W, which is a pullback that stops at a significant level, suggesting that the buyers are regaining control after testing that level. Breaching the level. If the price starts to break above the level where the first W formation formed, it could signal that the buyers are gaining strength and preparing to push higher. Given this, if the buyers breach the level you're watching, it could be a good sign that they're about to continue pushing up. If the price breaks above that key level where the formation is completing, this could be your signal to enter long, buy, for a quick scalp. Since you're on a 1 minute chart and looking for quick moves, make sure your stop loss is tight to protect against any sudden reversals, and look for small take profit levels as soon as you see momentum in your favor. Are you seeing that the price is already starting to push up above the key level, or are you waiting for a confirmation candle before you take action?
It is just right on at that point to fight to get breach, to move above this next level. The buyer need to move above this key, otherwise the seller will step down hard this time. But since it's just about cooking, and it's 1 minute candles, so the candles getting very small and fighting there, like they have hesitation, both party waiting to see who gonna show the first sign so they can attack, and that's why this candle gets smaller, and I'm waiting for the confirmation, like a doji long wick or grabbing the stop loss or whatever. It's a moment of truth now. Even though I'm that not patient people to wait for long, I have to wait for this one.
It sounds like you're right at the critical point of market indecision, where both sides are weighing their next move. The small candles on the 1 minute chart suggest that there is hesitation from both buyers and sellers, which is often a good indicator of a potential breakout once one side finally takes control. Given the current situation, waiting for confirmation. It's great you're recognizing this moment of truth. Confirmation to look for. A long wick can indicate that the market is rejecting the direction and might turn back in favor of the other side. Or if it's a bullish engulfing candle, it could signal that buyers have taken control and are pushing up. Pay attention to volume as well. If volume increases with the candle's movement, it could be a sign that one side is starting to push strongly. Given your strategy of quick scalping, you're right to wait for confirmation before jumping in. This could help you avoid getting caught in a false breakout, especially with the market in a choppy phase like this. It seems like the next candle could give you the information you need. If the buyers break above this level decisively and you see the market's intention through the confirmation candle, that would be a good time to enter long. Are you still observing, or have you decided on your entry yet?
I'm looking for a volume indicator in here. I don't know which the best one, the tick volume or price volume trend or trade volume index. I don't know what all of these things, but I'll push one. Let's say I push tick volume. Let's see what it gives me. Oh, it's too much. Okay,
The tick
at least I
volume
got
is a
tick
good
volume.
place to start. It measures the number of price changes, ticks, that occur within a specific time frame, but it doesn't show actual trades. It's often used to gauge market activity or volatility, and it can help indicate whether a move is being driven by strong momentum or if the market is stalling. Here's what you can observe with the tick volume. 1. Increasing tick volume can show that the market is becoming more active, suggesting that one side, buyers or sellers, is gaining strength. If you see a big increase in volume while the price breaks a key level, that could be your signal to enter. 2. Decreasing tick volume might indicate that the move is losing momentum and a potential reversal or consolidation could be coming. Since you're watching for a breakout or pullback at the key level, high volume at this point would give you more confidence that the price action is not just a false move. You could compare the tick volume to price movement. If you're seeing higher volume on the upward movement, bullish candles, it's more likely the buyers are pushing the price higher with real strength. Now that you've added it, take note of how the volume is behaving as the price moves. If you notice higher volume on the move up, it could be worth considering entering. If the volume drops or stays flat as the price rises, it might suggest a lack of conviction, and you might want to hold off. How is the volume behaving on your chart?
The volume is look regularly, not particularly high like once before they reach up to this V formation, first V. After that, the volume is decreased.
If the volume looks regular and not particularly high, like it was before the first V formation, this could indicate a lack of strong conviction behind the move. It might suggest that the market is in a waiting phase, where both buyers and sellers are uncertain about the next direction. Since the volume isn't showing a significant spike, it could be a sign that the market is hesitating at this key level, and the breakout might lack momentum. You might want to be cautious here, especially if the price isn't showing strong movement with high volume. If you're still in the trade or planning to enter, it could be worth waiting for more confirmation, either a strong breakout with volume or a clear reversal pattern like a long wick or doji that signals indecision from the sellers. If you're looking for that confirmation to make your move, it's key to wait for the volume to pick up if the price breaks above the key level. If the volume stays low and the price fails to break, the move might be weak and susceptible to reversal. Does the volume pick up as the price starts pushing above that key level, or is it still staying relatively low?
The volume still remain the same, and the stochastic is not significant move up and down and like reaching over the overbought area, but they're just touching 20% and 80% and then moving back down. And right now the stochastic say we are at the top of oversold 80%, and the price is all the way pointing down but not yet reached to oversold. But anyway, the volume are the same and the price are moving down like normal, but it reached now the critical level where they should be poking out or moving back. It's like at the middle of the no man's land.
It sounds like you're at a critical juncture where the price is in a neutral zone, not yet showing a clear direction, especially with the stochastic oscillating between 80% and 20%, without significant movement in either direction. The fact that the volume remains low and steady while the price is hovering near key levels suggests the market is still uncertain. This could imply indecision from both the buyers and the sellers. When the price is sitting in no man's land like this, it's often a sign that the market is waiting for a catalyst, either a breakout or a reversal at the key level. The fact that the stochastic is touching the overbought level while the price is coming down could indicate that there's some downward pressure, but it hasn't fully confirmed yet. At this point, you could either 1. Wait for more confirmation. If you believe the market will break the key level and move upward, you could hold off and look for a price action signal, such as a long wick or indecision candle, to show the buyer's intent to continue. 2. Take the short position cautiously. Since the price is pointing down and the stochastic is showing overbought conditions, it could indicate a potential reversal to the downside. However, given the low volume and lack of strong momentum, it's still a bit uncertain. If you take a short position, consider using a tight stop loss to protect against sudden price moves. In either case, it's about staying patient and observing closely. If the price shows a solid move either up or down with strong volume and clear direction, that would be a better time to act. Does that line up with what you're seeing on your chart?
I was see nothing, only the same fighting, like up and down, in the middle of this key level. Oh no, now it's the red start to peak out more than normally. It's get big candle, red, trying to penetrate, not to respect the SLR, and trying to go down to south, but they're still above the Bollinger Band midline, which is 36 MA, and this is like they are still fighting, even though it just shows from time to time a big dashing up and down so quickly. It's like trying to fooling me. Oh, get in now, sell in now, I'm big now, sell me. But I said, you still above 36 MA, come on, how can I sell you? Or maybe I just not patient enough to sell, because they're up at the upper side potential of the range. You're supposed to sell on the upper side of the range. That's come in my head, you know.
It sounds like you're in the middle of a classic market indecision phase, where the price is chopping up and down, teasing a breakout or reversal. The big red candles breaking through key levels can definitely feel like a signal to sell, but you're wise to be cautious, especially with the price still holding above the 36 MA, Bollinger Band midline. Here's the key takeaway. You're right to consider range trading principles, and typically selling at the upper end of the range makes sense. But the fact that the price is still above the 36 MA, which can act as a dynamic support, suggests that the upward pressure might still have a chance. If the market is in a range, it's best to look for consolidation at the high end of the range, followed by a clear breakdown or reversal signal before committing to a sell. The market could be trying to trick you with those sharp moves, which is common during sideways trading or in the face of low volume. Those quick flickers in price action are often just the market trying to get reactions from traders, making them jump in before the next big move. The key here is patience. Wait for a clear breach of the range, either upward or downward, especially if there's a confirmation like a long wick or a reversal candle at the key level. Since you're already thinking about selling at the top of the range, just keep monitoring. You're in a tricky spot right now, but it sounds like you have a good plan to wait for the market to show clearer signs of intent. How are you feeling about the potential of the price pushing back up before deciding?
I can't wait for getting in, so I already in one position and sell at 83,279. That's the
Got it.
entry price.
It seems like you've decided to take the plunge and enter the position despite the uncertainty. In that case, just be sure to keep a close eye on how things develop. You've already got a good sense of where key levels are, and with the market currently hovering around that critical range, it's important to manage your risk carefully. If you're still within your acceptable loss range, you might want to tighten your stop loss just in case the market moves against you. Since you're scalping and focusing on small movements, setting a stop that gives you some room to breathe but keeps you safe from a big reversal could be key. As the market continues to fight for direction, quickly take profits if you see momentum slowing or if the price reaches minor resistance points. Don't hesitate to exit early if you sense the market is stalling, even if it's not at the exact top or bottom you wanted. Would you say you're in a position where you feel confident enough to let it run? Or are you planning to be quick on the trigger with taking profits, given how volatile it's been?
I try to control with stop loss now, but my chart is a little bit tricky to use that function. I put a stop loss in and take profit in. My stop loss is 83,413. So I maybe have to move a bit further up, but the technical is okay. I got it. I move it to where the last selling, okay, the last selling resistance, and my take profit is just about at the lower, the first low of the SLR, the support, where the guy who started for the buyer. And so this is my position. Everything set in. I'm waiting.
It sounds like you're actively managing the trade, which is great. Placing your stop loss just above the last resistance level makes sense because you're protecting yourself if the price pushes back against you. Adjusting it based on that key level is a good strategy since you're giving the market a bit of room while staying within a level that should hold if the trend is going to continue in your favor. For your take profit, positioning it near the support of the SLR, where the buyer's move started, makes sense as well. If the market does drop back to that support level, you could capture a solid move without overstaying the position and risking reversal. The main thing here is to stick with your plan and monitor the price action closely. The market might test your patience, but keeping the stop loss and take profit based on logical levels should guide you through. How do you feel about the trade right now?
Neutral.
Do you think your current risk-reward setup is balanced, or are you considering any tweaks as things evolve?
I would tweak it if the things
Sounds like a good idea. Tweaking it while monitoring the price action can help fine-tune your setup. Make sure the adjustments are in line with the key levels you've identified, so you're still respecting the structure of the market. What are you planning to change? Are you thinking about moving the stop loss or take profit or adjusting something else?
Moving stop loss or take profit could be coming according to the momentum.
That sounds like a flexible approach, adjusting as the momentum develops. Watching the price action closely to see how it reacts can help you decide whether to tighten your stop or adjust your take profit target. If you notice strong momentum in one direction, you could trail your stop to lock in profits. Or, if the price starts reversing, you might want to adjust the stop to give it a bit more room, depending on the market conditions. Are you seeing any signs that suggest the market could be shifting, or is it still in that consolidation phase?
It's consolidation. The seller is now his turn to move the price down to bridge the guy who started below him. It means the SLR, the next low of support.
It seems like the seller is trying to gain control now, and if they manage to break through that key support level, SLR, it could signal further downward movement. If the price is about to bridge the support, it could indicate a stronger bearish momentum, so your stop loss may need to be adjusted accordingly. Are you thinking of keeping your position open if it breaks through the support, or are you more inclined to cut it early to limit potential losses?
I will look at it when I see it closing to my take profit. I will decide accordingly.
That sounds like a solid approach. Watching the price action as it nears your take profit will give you a better sense of the momentum. If it stalls or shows signs of reversal, you can always adjust your strategy. Let me know how it goes.
Is gain lower or right exactamente on my price? They go up a little bit, make my position in red, and then I'll come back to where it was, and I looking for green on my winning, not red. Now they are at the same price, on my price, right on.
It sounds like you're at a critical point, right at your entry level. With the market going up and down a bit, the price action is testing your position. If you're seeing red, but it's coming back to your entry, it could be a good opportunity to stay patient, especially if the market is still within the range you anticipated. Keep an eye on the momentum and be ready to adjust if the price starts moving more decisively in one direction. Let me know how it develops.
It bouncing back above my price now a little bit because of stochastic said it's time to go up. We are oversold at 20%. Now it's going up, but then the seller push it back down, lower my price again. That's the seller are my team. They are at 20% of stochastic with the big red candles coming down. I see no green. Where is the green? Where is the buyer? Come on, buyer, fight me, show me your strength. There's no buyer, but wait until they come. Now it's at my price where I entry.
It seems like you're in the thick of it, with both sides battling for control. The price is right at your entry, and while the stochastic is showing the potential for upward movement, the sellers are pushing back hard with those red candles. The buyers haven't shown up yet, which is a bit concerning. This might be a good moment to assess the overall market strength. If the sellers continue to dominate, you might need to consider adjusting your stop loss or preparing to exit if it goes against you. But if buyers start showing up and pushing the price above, you could have a chance for the move you're waiting for. Stay sharp and keep an eye on that momentum.
Yeah, I think the buyer are waiting, they're waiting for filling in, for taking order, for whatever in their mind. They are want to move the price up, but not just right yet. They want people to trap in before, and I'm trapping in there, but my distance of winning is just the next support. Take profit at the next support.
It sounds like you're analyzing the market carefully and understanding the buyer's strategy. They might be setting a trap, waiting for the right moment to push the price higher after getting some traders stuck in. If you're targeting the next support for take profit, it seems like you're keeping your goal clear and risk controlled, which is good. Since you're already in the trade and the price is at your entry level, just be ready to adjust based on the market's movements. If the sellers continue to dominate, stay patient. It's all about letting the market play out.
Now the price go back, eat up my price. They stay above my price now. Where is my price? Yeah.
It looks like the market is testing your patience right now pushing back and eating through your entry price. This can be a tricky spot because it's either a sign that the buyers are starting to step in or the sellers are still in control and pushing the price down further. Since you've already set your stop loss and take profit, your next move might depend on how close you are to those levels. If it's just bouncing around near your entry, you might want to stay patient and wait for confirmation. But if it's showing signs of moving against you, don't hesitate to adjust your strategy to protect your capital. How far is your stop from here?
Not so far. It will reach to the next above resistance. Above there is my stop loss. But still the prices hang around this my entry price. Just a little bit above it. But that is what they did.
It sounds like you're in a tight spot with the price hovering just above your entry. Since your stop loss is not too far and it's close to the next resistance level, the market is likely testing those key levels. You could stay patient and see if it holds above your entry, but if it starts to move against you more significantly, it might be a good idea to consider adjusting your stop or taking action before it hits. If the price does bounce back from here, you might get a better entry at your target level, but if it doesn't, being proactive can protect you from a deeper loss. How are you feeling about the setup? Does the price action still seem like it could push in your favor?
I don't know yet. It's since this morning is equilibrium. It's just people like me who's get in first don't care. This is bad. Okay, I have to get rid of this habit. But anyway, I no patience. I get in right where the whole world fighting price. That's the result. They're hovering around my price, so I have to accept this and waiting for who gonna take the lead.
It sounds like you're being very honest with yourself about your approach, which is great. It's definitely easy to get caught up in the moment, especially when you're feeling impatient and the market seems like it's just stuck in a battle. Sometimes getting in too early can lead to these moments of uncertainty where the price just hovers, testing your nerves. Patience is key, but it's tough, especially when you're in the middle of it. You're doing well by acknowledging this behavior. It's a process of refining your strategy, and part of that is being okay with not always acting immediately. When the market is in equilibrium, it can be better to wait for the clearer signs of who's in control before jumping in. Do you think you'll hold on and see how the battle plays out? Or would you consider adjusting your approach next time?
For me to get in first is like...
It sounds like you're ready to stick with your decision and ride this one out. Getting in early can be tempting, especially when you want to be part of the action, but sometimes it also means sitting through the uncertainty like you're doing now. If you believe in your analysis and the risk is manageable, it could be worth holding your position and seeing how it develops. Do you feel like there's still a chance for the market to turn in your favor? Or do you think you might need to adjust things depending on how it moves?
I already in red a little bit because the price just stay above my price, my entry price, and the stop loss not far away. And to get in this time or get it right now, it's just me to have no patience, and I want to tip my toes into water, see how is this work. Equation must like I need to see the card. I need to pay the price to see the card, the next card who pay poker. I don't know, I don't play card, but you need to pay some money to see the other enemy price. You know what I mean? Just test the water.
I get what you're saying. It's like you're testing the market to get a feel for how it's behaving, even though the stakes are high and the patience part is hard. It's tempting to just dive in and see how things unfold. The pay to see the next card analogy is fitting. Sometimes you need to take that small risk to learn and gauge whether your strategy will hold up. But it's also about being aware that even small steps like this can add up, so staying disciplined is key. It sounds like you're balancing the desire to learn and see things unfold with the understanding that patience could pay off too. How are you planning to manage if things don't go in your favor right now? Are you ready to act quickly, or are you sticking to waiting for confirmation?
I wait a little bit, and if the price win my trade now, that means I lose, they hit my stop loss, then I will change direction to being a buyer, because sellers fail. But it's too early to say, because most of people lose money because the price is stay bouncing in the range that when they're supposed to go, because the bet time is nobody thirsty to play. It's like betting on the grass eating horse, not in the race tracks. That's it's Sunday, and that's why I do this on the demo.
You're in a tricky spot where the market is just hovering around your entry point, not quite committing to a direction yet. The analogy about betting on the grass-eating horse is a good one. It's like waiting for the right moment when the market's thirst to move is stronger. When there's no clear direction, you're essentially betting on something that's still deciding. If the price hits your stop loss, flipping to the other side makes sense, especially if the market shows more of a buying sentiment. But as you said, it's early, and these range-bound conditions can be tricky. The key will be to stay calm and not rush into anything. If it turns out that this trade doesn't work, there are always other opportunities to find, and they'll show up when the market's ready to move for real. How are you feeling about waiting for the next clear move? Do you think you'll wait for a bigger signal before jumping into the next direction?
For me, hard to expect on Bitcoin crypto thing is different than Forex, because the whale thing can jump in at the Sunday, because these guys don't work, they just feel like anytime I will play with this. So unexpecting on crypto are more likely to happen than Forex. So I just gonna accept this strategy today. My main target is on trying to get in with the scalp hedging both party. Doesn't matter what direction it is, just get in and out quick, take a small profit. The more you frequently trade, the more you're likely to have to be in and out quick to take the profit, to lead, to save your income, your R, to pay for the big one hit, and maybe you break even from there. But from the beginning, you're trying to hit and make a small profit. The much of the frequency of small profit can add up to overcome for the next hard hit. Make you can be wiped out from the trade, or you stay.
That makes sense.
Even.
With crypto, the volatility and the potential for sudden moves due to whales can definitely make it feel more unpredictable than Forex, especially on weekends when things can shift fast. Your strategy of scalping and hedging both sides, taking small profits, and focusing on quick in and out trades seems well suited to handle these kinds of market conditions. The idea is that by staying active and managing multiple small wins, you can cushion yourself against bigger losses and keep your risk in check. It's smart to focus on frequent small wins and gradually build up your balance. Just remember that even with a more frequent trading approach, the key is to stay disciplined. Keep your entries tight, monitor the risk, and don't let the small losses